Welcome to this week's Treasury Career Corner podcast, where I interview Treasury professionals about their Treasury careers. Each and every week, I talk to them about how they've built their careers, where they are now, where they see both themselves and the Treasury profession going to next. Let's get on with the show. This week's show, delighted to be joined by Andy Hawes, the Group Treasurer at Innospec Inc. Now, Innospec are a global specialty company with manufacturing research centres and operations in 24 countries. The company provides chemicals, additives, formulations for so many different markets. You got chemicals, construction, polymers, waxes. He'll explain that a little bit later in the show. Innospec itself currently employs over 1,900 talented professionals globally. But again, as always, each and every week on the show, let's get more into Andy. And we've known each other for a number of years, but more, I just wanted to go back to the beginning of his career. And we've got some interesting tales, actually, about some of his thoughts about it, and accountancy, treasury, and then your career to date. So, Mr. Hawes, take us back and how you first discovered the world of finance and then the world of treasury, sir. So over to you.
Great, thanks, Mike. Got into finance, not via the usual sort of accountancy professional route, but left school at sort of 16 and got into it that way. So I sort of worked my way up, did night school, business and finance at night school whilst working, and I sort of always wanted to be sort of involved in the running of businesses, really, and joined Renold PLC in the late 90s, I think it was, and I thought that gave me an opportunity to sort of work alongside some people who were really experienced sort of financial professionals, and but they've been in the business for an awful long time, so they gave me a really good grounding in sort of PLC finance and accounting, and they also gave me an opportunity to further my studies. So I started doing SEMA at that point. So I thought,
just for the listeners, what's Renold?
Renold PLC. It's a chain engineering manufacturer based in the northwest of England. It's been going for an awful long time. I think Hans Renold had something to do with the invention of the bicycle chain, and they produce a variety of engineering products throughout Europe and the USA. It's a fairly small PLC now, but it's got a very, very good heritage over the years. So it was kind of a really good business to sort of join, because I say it had been the people who were there were very experienced. They'd been there for a long time, and they just kind of give this grounding in reconciliation. You know what I mean? It's sort of understanding the balance sheet, understanding how all these kind of things worked, and more importantly, making sure it's right. So that when we produce the reports, and this kind of grounding from sort of old school finance accountants and whatnot, has sort of stayed in good stead since then, because you had to make sure that everything within that balance sheet was correct with it being a PLC.
You started there, and as you say, you studied as an accountant. And I know that's a backbone of some of your experience, and then you've developed into treasury, if that's the right way to put it. But you, as you said, the header of the show, you were sort of doing that at night school. What was accounting your first interest, but then it sort of grew into treasury?
It was really because I wanted something that would give me the opportunity to be involved in management and running of business. And again, I spoke to FDs and financial guys at other places where I'd worked out much smaller than Renold. And they just sort of gave me this advice as to that was a good way in. SEMA being management accounting. So it just gave you this kind of, if you look at the exams that they do, it gives you a sort of a breadth of business in general. And so I thought, okay, this is great. So I get to see all the business rather than just financial accounting. Financial accounting was part of it, but it just gives you a whole breadth of the whole sort of business and how a business works. So I kind of like that. And then having sort of worked at Renold for a few years and got sort of qualified, the treasury side of things came along because I was working hand in glove, really. What I did at Renold initially was the head office financial accountant. And so you were sort of working hand in glove with the assistant group treasurer and the treasurer at the time. So that was my first introduction to it. And the treasurer, I'm trying to think back, it's a long time ago now, but I think the treasurer, or the assistant group treasurer, I should say, went on maternity leave, I think. And so there was just this period of time where they needed someone to sort of cover. So I started to do FX trades and started to do all that sort of thing, and you're speaking to the banks, and then you're looking at cash flows and you're looking at all these kind of things that they do, and deposits and what to do with cash. And it just got, I just got hooked there and then. I loved it. I've always had an interest in business, in markets, how currencies are performed. And of course, in those days, it was, this is pre-Euro days. So we had a whole suite of currencies, and so people would be sending me in their cash forecasts in the different currencies, and I'd be working out what we needed to hedge. So we hedged accounted properly there. So I got an introduction into that. And you were kind of thrown in at the deep end, really. It was just a case, well, here you go. This is how we do it. The person who went on maternity leave gave me some pointers. But because we were working hand in glove, I'd seen the accounting side of it, seen how all that worked. So I got a good idea. And once you're into that, you don't want to let go. And the opportunity came along a few years later at Renold to actually take over the assistant group treasurer's role, which I took with open arms. And there's other things involved in it as well. So there's the pension scheme and managing the pension funds. So I've never looked back. And it was because it was so established. Actually, you got to see it from almost the best way to do it, sort of thing. This had been done for so many years. They'd homed it, and they allowed me to sort of try and home it a little bit better as things moved on. So that's how we did it.
And what was the pressure like for you? We just spoke before the show there about your latest company. We'll come on to that shortly. But, the fact is Treasury, sometimes is quite distant to the business. You're holding the cash, you're doing this, but you weren't. You were in a engineering business. You started out in there and they were like really relying on you for results and everything else. We talked about cash, and that's a key thing that comes into sort of the back of things, as it were. What was that like for you? Was there a knock at the door quite a regular basis, or show us the cash forecast? Or how did it work?
Well, I'll tell you how it changed rapidly because the financial crisis of 2007, 2008 changed the whole game at Renold, and it suddenly meant that we were in a much more precarious position because of a number of things. Obviously, the currencies plummeted and sales forecasts, everything went south, and we were in quite a difficult position. We all took 10% pay cuts and things like that to try and help the business out. And cash became absolute key to everything we did. So all the hedging, all the forecasts, all had to be tied in properly. And then there was a weekly focus on cash forecasting. But I would say about Treasury at that point, the whole thing changed. But the one thing as I said earlier on, what I like to do is to get involved in the business. I like to sort of get my sort of tentacles, if you like, into different departments and different bits of be it manufacturing, AP, AR, development of the business, all these kind of things. So your reach moves all over the place. And I think that sort of suits my character now more. And I think Treasury changed to that. So we had to be involved. You had to understand the business. Whereas before that, you could get away with being in your ivory tower and just sat there. So we do the hedging, we produce the reports, we do the hedge accounting, we produce the note for the accounts every year. But from 2007, 2008, we were literally on the front line. We had to find out from all these places what their cash is going to be. How much cash are you going to collect? How much are you going to have to pay? Link the two things together. Then how is our FX doing? How is our hedging doing? What's the mark to market like now? What's it going to be? And you're suddenly very, very, very aware of the markets. And you're taking notice then of all the reports that you get on how the currency is doing, how the economy is doing. Everything became really, really important. And it's a fairly small business, as I say, and therefore almost every dollar was key. So we had to know what was going on. And of course, you're looking at each quarter, you're looking at covenants then. The covenant work was critical and has been ever since everywhere I've been, to make sure you tell the bank this is where we expect to be at the end of the quarter. And we had to hit that. We had to sort of convince the banks, because if they think you're in control of your cash, they're a lot happier. If they think you're out of control and you've no idea what your cash is going to be at the end of a quarter. And we were running, we had some targets for where our covenants had to be, really, to make sure we weren't in any peril. And of course, the interest on top of that, because interest was, there was interest in those days. And so it all mattered. That was the point. It all mattered. Suddenly, it wasn't so much that the glare was on us, because it was on the business in general, but we were adding value at that point. And it was adding value under the line, but we were adding value.
And how did you maintain in a pressured situation? And again, we're going to move on in a moment to your current role and everything else, but how did you maintain those relationships where, again, we were just talking about APAR before the show and some of the challenges we have with there and stuff. But what's your key, or certainly if you reflect back on those days, I know we spoke about this before, but to talk to guys about the collecting that cash, or, those, what's your key to success in that?
I mean, not just there, but so I've gone from there to sort of Speedy Hire to Brammer, and in every single place, the key is these intercompany relations. So you are the tentacles I mentioned. You need to talk. You need to know your business. First of all, you need to know the people in your business who you're dealing with. You kind of need to find who is the right person to speak to. So in AP, who is that right person who's got their finger on the pulse? You're hoping that the AP manager and the AR manager are good, and generally everywhere I've been, they have been actually. It's quite a, they're a decent set of people who get to that position and they know what they're doing. And so you're always talking to those people, and you get them to understand what you need, but more importantly, to understand how it works with them. Because I can sit in my ivory tower and speaking to someone, say in Poland, and something may look really silly from my perspective in Poland, but actually in Poland, and I can sort of say to them, why are you doing this? I don't understand this. Until you go out to them and then you see and you explain to them, you talk to them about these things, then you get a kind of understanding from both sides. And actually the chances are they know a damn sight more than I do. They know their customers, they know the suppliers, they know the sort of local sort of foibles of what's going on. So you have to work with them to understand that. So that's kind of where you start from. But then you've got to push to make sure that there's no slippage. So okay, you've got to give them that sort of bit of a leeway because they understand what's going on. But at the end of the day, cash needs to come in. So if it's we mentioned purchasing, didn't we, before the call? You've got to make sure that the purchasing understand the bigger picture, because they can sort of sit there. Their job, I suppose, in purchasing is to make sure that whichever factory or whichever goods they require, we have those goods in. But they've got to understand also there is a cash implication to that. So just have a think about how it is. Think about your payment terms. Don't just trying to make your supplier happy or your vendor happy by saying, well, we'll agree to payment terms to make them happy. But actually, we've got to be based on our terms, because if your DPO, your DSOs are out of kilter, which it can easily happen if you've not got this kind of goal congruence going on. So you've got to create like the whole picture for them by treating them as adults, basically, and sort of saying, well, this is the impact of what you're doing on the rest of it, and you just you keep them involved all the time. And as we said, this is an ongoing, never stops. It's always going, because things can turn around very, very quickly in cash terms.
And as you say, it's about thinking about the company as well as just rolling and agreeing that, and that's been a key fundamental for you as well. But you then mentioned just a moment ago about then you made the move to Speedy Hire and things. Can you explain? So that was engineering business, then to Speedy Hire, and then bring us up to date. So what were those?
I've been at Renold for probably as long as I could. I mean, in the end, I had two stints there, but I've probably been there for over 15 years, getting qualified, moving through the business. And I've probably taken it as far as I could take that particular role. And of course, I'm ambitious. You want to push your career as far as you can. So I eventually left, and then a couple of little stints. I ended up at sort of Speedy Hire. They were a business known to me. So they hire tools and that sort of thing. You'll see the wagons up and down the motorways, and it's a sort of on motorway roadworks, you'll see Speedy Hire things all over the place. So they hire plants and that kind of thing around the UK. And yeah, I mean, they were just in a position where things had gone a little bit pear-shaped, shall we say, for them, and they needed sort of treasury to get a handle on cash. They were having difficulties. And again, it wasn't that far off the financial crisis, and they were having a rough time. So they just needed someone to come in and sort of firefight, basically, and try and get a grip of cash. And they had asset-based financing at the time. So it was, first of all, get a grip of that. And that meant, you're reporting every single week on that. So your financing is based on sort of those assets, be they debtors or be they physical assets. And you're drawing cash down based on that. And again, this goes back to this understanding of your cash flows. With Speedy, I think we got to the point where we required, really, really close in forecasting, sort of weekly and then quarterly. So you go weekly, monthly, quarterly, and it was really important that the banking group again had faith in those quarterly numbers. So and obviously it was a case of we'd almost be going hand to mouth how much money is coming in that day. So we'd be first thing in the morning down to AR to right what's coming, what's due to come in, what's coming in the afternoon, and then you're on to AP in the afternoon saying, yes, you can pay this, trying to keep a buffer. So that was quite exciting. So you had this sort of firefighting position. As you got further into it, you could feel that the pressure would just go away a little bit. As we were sort of year in or 15 months in, that pressure got better and better, and it all started to settle down then. And and again, that was the whole purpose of that job, was to come in, firefight, get it under control, and just make life easier, I suppose, for the business. So they sort of knew where the cash was, and so I wasn't there that long actually. I enjoyed it there greatly, and I've sort of kept in contact with the people who I work with at Speedy, because it's a nice company based in outside St Helens, sort of Haywood up there. So and it's kind of centralised around there. and it sort of has lots of branches all around the UK. And it was a kind of, if you know, so St Helens, Wigan, that kind of area, quite friendly people. And so it was a bit of a heavy heart that I moved on, but it was for the same reasons. Again, there's career progression. I thought there's probably no more I can do there now. So if I want to keep moving my career on, went to a company called Brammer PLC, who are a company who basically go into factories and do maintenance. So they maintain plants, factories, and they do so where I work now. It's a pan-European company who were also in a very similar position to Speedy, just through different reasons. I mean, just investments had gone wrong, and funnily enough, they had a huge downturn. Both companies, as I say, this had gone through a long period of growth, and so they'd sort of, they were paying out bonuses every year. They're doing really well, just growth, and they're sort of darlings of the market. But both of them had an event that caused it to flip the other way around, and as a result of this experience, it means it's easier for me in my current job. So it came into Brammer, and they were probably in a worse position than Speedy were, and so trying to profit warnings galore, and even warnings around covenants and that sort of thing. So it was that was far more challenging, and the cash position was almost impossible to sort of control at that point in time. We got there. The gone to a position where they almost didn't have a cash forecasting in place when I joined, or they just sort of started one.
And with yourself, why do you enjoy it so much? What I mean by that is, why do you enjoy that? Some treasurers want to sit back and consider stuff and everything else, but you want to be at that fight, making that real difference. Is that why? Because you want to make a difference to the business?
I do actually, but I find it quite exciting. I find it I just get it is a sort of a buzz from the. It's not some sort of arrogant buzz. It's just a real enjoyment, because what it means, you go into the company, you've then got to really learn about that business quickly, and you've got to get to meet people in that environment, in that situation, and it's quite exciting really to get to do that way. It's quite stressful as well. There's no doubt there's a lot of stress involved, but the adrenaline buzz you get gives you, your brain gets engaged much quicker, and then you're in there as a team. I mean, there's nothing better than sort of backs to the wall sort of idea of trying to get through something. You're all in the trenches together to get through this, to make sure the company survives, to do these things. And people, you kind of find that the best in people in those situations. And all these companies are really good companies, and they've been through a really good growth. Just that something has happened that's caused it, and it can happen to anybody. You see companies folding left, right, centre, some huge companies. And I'm sure that it's because they've been aware of the cash position, but they've not done anything about it. So this is always do something about it. Think, you can turn this around. And it's not for, you're not trying to get this, the light doesn't often shine in a treasury. That's not what we're about, really. We generally sit there and want to make sure that everything is controlled, and we're about risk. Yeah. So we control the risk, we maintain a steady position, but we're always looking ahead. And it's important to keep looking ahead. So with cash, it's obvious. We look at all sorts of other things. We look at hedging. That's what we do hedging for. We manage interest rate risks. We do all these risks for the business. But it's all about that. But the only way to do it is to send, again, these tentacles out, understand the business, know the people within the business, really know your audience, because you're then dealing with people around you, different levels, but almost always up to sort of directors and board level. And you've got to kind of know what they want, and their buy-in is really important, because there's a lot of, you can find a lot of sort of financial directors don't really quite get what Treasury does, because of the fact that, we should really be in the background. We should be doing all this work, like the duck thing, where, our feet flapping away underneath the water. That's how we should be. They don't need to know all that. When I do, we'll come on to Innospec soon, when I do a weekly cash forecast, and we look at the variances each week, they get like a little 5 or 6 line summary of where the variances are, what's caused them, and all this kind of thing. But the amount of work that goes into trying to find those variances, and what we've gone from point A to get to that point, they don't need to know that. And it's for us to understand what's really going on at that sort of granular level. But we don't need the people above us to know that. They just need to be secure and be happy that we've got a handle on this, and they can do the important stuff. Make sure the business is successful. But we mustn't be afraid to say, right, I can see a problem here with the cash, or if we do that, or if this happens, we've got a problem, and you can't do that. You've got to be brave enough to stick your head above the parapet to sort of say, there's a problem. You can't do that, or you've got to do it, or you can't pay them, or you can't pay this, you can't pay a bonus, whatever it is. You've got to be brave enough to do that. That's a crucial bit.
So bring us up to date. Talk to us about Innospec, who the company are, your role there, and again, we know you make a difference on the cash cash line, but tell us just a bit more about your role.
Okay, well, I'm the group treasurer at Innospec. Innospec is a listed US chemical company. It's a big business. It's a multi-billion-dollar business. It has the finance base in Ellesmere Port in the UK, so finance, treasury, tax, that kind of things. And we also manufacture here, and we originally manufacturers of products within that sort of Ellesmere Port area, which is quite a large chemical. It's been, a chemical plant that's been there for 70 odd years. But predominantly it's based, so the corporate side is in Denver in the US, and it evolved from the oil fields in the Great Plains out there in the US. So we put chemicals into the drilling so that it's more efficient getting chemicals out of the ground, but we add chemicals to all sorts of products, so fuel specialties, that kind of thing. So to make engines more efficient, it's really good for the economy. We're big on sort of green stuff because being a chemical company, that's really important to us. So we've released sort of reports on our green credentials for decades. This is not something that we've only just sort of landed on. Because it's important for us that what we actually do and the chemical additives that we put into things are sustainable, and they're all done for the sort of right reasons. So cleaning chemicals, that kind of thing, and because of the diversity of the products, it means that we're quite protected against a lot that the world economy could throw at us. And we know what's going on at the moment with COVID, and with a year ago there was COVID, there was oil prices collapsed, which is being quickly forgotten now because the oil price is back up again. A variety of things. So that's what Innospec is. We have a small treasury team based in the UK who we have centralised banking. So we are pretty much Bank of Innospec. We fund the group from Ellesmere Port, so we have the short-term liquidity that we deal with on a daily basis to make sure everyone's got the cash they need. And we spent a lot of time on cash forecasting, getting the right tools in place to be able to manage that cash. And it's because it's kind of centralised in the UK, centralised in the US and Asia, and then it sort of had those two hubs that we control within the UK.
And Andy, you've mentioned there that sort of all the way through, cash is a key thing for yourself, but I know that there's other things, it starts with cash, doesn't all end with cash, but, is that where you see, you've talked about you adding value there, but again, we spoke the other day, we did the pre-podcast call and various other bits, but I know there are other areas that you think are important. We've talked a bit about qualifications, we talked about different areas. What would you say? I don't want to run out of time on today's show, but what else do you think is important, would you say?
In terms of treasury as a career, or just?
Yeah, well, both really as a whole. And, some of the listeners today will be sort of treasury managers, coming up the curve. And then we also have treasurers from across the world. So, we're talking to a couple of different audiences, as it were, but what things, reflecting on it, we're not at the end of the show yet, but what would you say?
There's lots of crucial areas in treasury. Every company is different. I think that's the first thing to be aware of. So yes, we've done cash to death, but in other companies, it might be really important to have a handle on FX. It might be really important to have a handle on interest rates. So it's a very, and everyone's different. Every single business is different because it's different sectors. I've sort of worked in a lot of manufacturing, for example. So we are buying and selling products, but also same in service sectors. I've also worked in service sectors. So although it's a different product that you have to sort of maintain, you've got to understand how the cash flows. In some cases, cash flows in very quickly and out very slowly. So the cash is always the sort of the driver. But I think it's important within Treasury to have an understanding of, and I think we talked about briefly about how Treasury I think used to be, where it was this ivory tower sort of concept that was just locked away, and you were literally looking at the facility documents all day long and making sure that everything was hunky-dory within that, spending your entire day almost like a Bible. Whereas nowadays, I don't think it is that. I think the key to any treasurer coming forward is I think you need to be more dynamic. It's a lot more dynamic of a profession, and you've got to be able to, the soft skills are really key. So of course you need to have the qualifications. I've got a bit of couple of certificates and whatnot in ACT just to bolster the SEMA qualification. So the technical side is important, but beyond that, it's the ability to sort of look at things and try to evolve all the time. We all know that going forward, one of the big projects we've got coming up now is going to be automation, looking at evolving treasury management systems, looking at in fact how the cash forecast becomes more AI driven. So that's going to be a big thing, and that will feed into everything. So as soon as you do, if you do an FX transaction, it will feed through automatically from you, perhaps you getting a forecast in. It then looks at what you need. It then goes away and produces the ticket to buy and sell currency in the future, that will then automatically feed into your cash forecast and into your accounts and into your hedge accounting. All that's probably going to be done by AI going forward. A lot of the cash forecasting will be AI, but someone needs to understand it. It's all well and good having reams and reams of numbers flying around. First of all, as I said before, when you go to the next level, so you're looking at director levels, they're not interested in that detail. They just need to have a clear picture, and they need to know that you know where that's all coming from, because you'll get asked awkward questions. We have treasury committees regularly, and I've been in them at every company I've been at, and you'll never quite guess the question you're going to be asked. So when you're going into there, you need to have the preparation. So you've got to have an eye for detail. You've got to understand your business. I think the directors, the financial directors, will have much more confidence in you if you can sound like you understand the business based on the knowledge that you actually do understand the business, because that's where it'll come from. So, and that's why I was thinking about what do I get out of it? Why do I enjoy treasury so much? It's because of that. Every company I've been at, you've learned all about it, and you get to know all the people, and you're part of something. And Innospec isn't, this is a really good business. You'll see from balance sheets when you look at the results that we put out on a quarterly basis that we've got a very strong balance sheet. But as I say, all the companies I've been at, I've been in that position, and it can change. So I spent a lot of time getting that message across. My cash management, at conferences, I've stood up and done presentations that were pretty bore most people to death, but it gets the point across that actually, again, how does your purchasing feed its way through to your AR? It's all linked together, and it's our job to kind of pull all that together from a cash perspective and understand how it all flows, but with all these other little foibles in between.
And so, we're not that far off the end of the show, but I know that it's important about people developing their treasury careers, and something you and I talked about quite extensively with yourself. And if someone is listening today and they're developing their treasury career, and you've covered a lot more about the business side of things and cash and stuff like that. But when we had our pre-call, you talked about what you think people should think about when they come into treasury and develop. What would you say that is before we then go to the sort of top tips and stuff? What are your thoughts?
I think be proactive, be prepared to learn, want to learn. There are elements of treasury where it can be, there are lots of dull things. There's no doubt. As with everything, there are plenty of jobs that we come into. You've got to do the same thing, churn. There's no doubt. Everything has that. There's no career that doesn't have that, where you've got all that learning. But it's the on top of that, want to develop it, want to move it on. If you could show a sort of keen attitude and are willing to learn within treasury, actually, and because it's a fairly niche side of finance, you're going to be competing with a handful of other candidates for roles. And if you can just sort of show that sort of zest and that sparkle to want to learn and to want to move it on, then you can shine, and you can and the curve can climb up quite quickly in treasury. As I said, there's always a stress. I think I mentioned before about not being afraid to put your head above the parapet. It's a learning curve. I learn all the time, every week. But most treasury committees, I learn something new. And I can sometimes get caught out with questions. You think, right, should have known that. Okay, next time I'll do that. And then you're always thinking about the stuff that you produce for the treasury committees. Okay, maybe we could try this. So don't be afraid to suggest new ideas. But know your audience. They don't want it to be a showy off thing. But just be prepared to move things on. I think people like to see gentle improvement in things rather than big ideas left, right, and centre. Because again, treasury is about risk, and it's not supposed to be flamboyant, but it can still be exciting.
Adding the value and everything else. And on that, so the closing words, we'll put your LinkedIn details in the show notes so that people can, connect to you and, expand your LinkedIn network. And as you can hear, guys, amazing guy to know, and, very practical treasurer. Some of the ones I've talked to treasurers, very high level and, lots of things and risk and whereas this is, real practical lessons from Mr. Andy Hawes here. So, Any closing remarks you might say, sir, before we will let you go off to a nice holiday period? What would you say?
I would encourage any sort of people who want to look at a role or a career in treasury that used to be seen as being dull, boring, dare I say, in the old days. Yeah. Now it just isn't. It's an exciting role. It's definitely one that merits a look at, because it just opens so many avenues, and the whole world is going around us now. There are so many risks, so many things that change in the world, that this is a career that can be very, very rewarding.
Excellent, and that's exactly why we do the podcast all the time. So fantastic, sir. Thank you for your time, and I look forward to seeing you, as I say, each and every week at the moment. Can't wait to see you in real life. Lovely to see you once again.
Thanks, Mike.
Thanks very much. Hello, it's Mike here again. I hope you enjoyed this week's show. If you did, then maybe you want to follow the show or subscribe, depending on where you listen, whether that's iTunes, Spotify, or another great place to listen to the show from. It's totally free and means that you'll be the first to see each and every week when we release a new show. And maybe whilst you're there, you could even leave a quick review. Reviews and ratings are among the most important metrics for a podcast to effectively rank. And as you can probably appreciate, the podcast is a lot of hard work to produce every week. It'd be amazing. Just take, say, 20 seconds, leave a quick review of my amazing guests and their great career stories. We'd really appreciate it. Thanks very much, and I can't wait to see you soon.